Friday, 28th of July, 2023. We're looking at the dollar or the US dollar. And we're looking for Asian range breaks. Okay, so the time you start looking for Asian range break is from 7 a.m. UTC or GMT time, UK time. So obviously the only condition really is we want to see a 5-minute break of the range. So these gray lines represent the high and low of Asia, and once this M5 candle at 725 closes above, you can start looking for longs on the dollar. So basically then it's up to you to just go through each individual pair, use your own analysis, whatever cross pair you think is weakest, which one has the best price action, you can take that trade. I'm not going to go through it now because it wasn't a good, whatever you took, at the very best you would have got broken even, because you can see what's happened. Price just turned around. So Asian range breaks, very simple to get, and they work quite a lot of the time, but also quite a lot they don't work. But what happens is, if an Asian range break doesn't work, so there's a few things that can happen. Okay, best case scenario, it just goes, you tap back, and then you get 30-40 pips or whatever. It's a very successful, easy trade. It just goes in one direction. That's plan A. But what can also happen is a couple of things. So one is that it just goes up a bit, it turns around, and then it goes down. That's also potentially a good trade. That's an Asian range fake trade. So it's gone up, ideally taken some liquidity on the left side of the screen. We can't see it, it's just an M5. But if you, when you're doing your analysis, if you see that this price here may have taken out yesterday's high or yesterday's New York high, even something like that, that adds confluence to your narrative building. Anyhow, so that's the Asian range break for you, okay, on the dollar index. It's not successful, but then at what point can we flip our bias and trade this as an Asian range fake to go back down? So I'll show you today what's happened. It's gone down really nicely. I mean, there's enough pips in there to make a decent trade. So at what point do you start looking for it? It's up to you, but you basically want to wait for a break of structure on a any time. It could be a 1-minute time frame. I prefer to use a 5-minute time frame. Why? Because I'm not trading just the dollar. This is my primary filter. So I'm going to wait for a 5-minute break, which makes it more likely that this signal is going to be a real signal and not a fake signal. Of course, it's not guaranteed because anything could happen. Price could come down to New York Open, shoot off again. It could just keep taking, ranging up and down. You get those days as well. But on days like this, it's quite good. So 8:30, the close of the 8:30 on the M5, I want to be short the dollar now, because we've come up, assuming we've taken liquidity. Even if we haven't, we've come up, well, we've taken Asian high, we've come down and we've broken structure. Once this has happened on M5, what you can do is on an M1 try to find your trade on one of the cross pairs. Okay, so this is the dollar up here. That vertical line represents the time, 8:30 close, where the dollar broke structure. So we actually have to move this to 8:35 now, because now we're on the 1 minute. Okay, so from this time onwards, could I take a dollar short? Okay, and you'll see there, it's a very successful, easy dollar short. Double bottom down there. That's something like 5-1, and it goes and takes it. Okay, so that's dollar yen. Successful trade, very easy setup. Euro dollar. Okay, well, you can see in hindsight it was an excellent trade. The question is where to take your entry. So what you'll see is prices come down here. Maybe if you're looking at it on a 1 minute. Okay, I moved over to MetaTrader because I wanted to illustrate one point. So on a 1 minute time frame, what's happened? So we've taken Asian lows on the euro dollar. So we can say that's a session liquidity take. Okay. On the way down, we've got 1, 2, 3 lower lows, and we have divergence on the RSI. The lows all stay the same on the RSI, whereas the price came lower. So you've got two confluence factors. 835 is here, okay? So pretty much at the middle, or the POC of this London first hour. So here's the question: where do you take the trade? You could take it immediately from there as a break of structure on this 1 minute, okay? Or if you want to be safer and more conventional, more methodical, you just fib up, swing high to swing low, okay? Wait for price to come into a discount. So this is actually a deep discount here. So even the midway somewhere around here, right? And there's actually a fair value gap in there. So if you wait for this fair value gap to get filled and 2 consecutive green candles, that will put you in here. Doesn't really matter because your stop at the very least has to be below 0, below this swing low. And you see it's been a fantastic trade. So, and most of them, I think today most of them are more or less the same. Let's just have a quick look at GU. Okay, so this GU, so first of all, did we get liquidity take of Asia? We didn't get a liquidity take of the Asian low. So that's the first thing you need to bear in mind, because you're going to be doing this analysis in real time. So 8:30, you got the dollar signal, but you need to be aware of what's happening on the other pairs. So whereas Euro had taken the Asian low, that's always a better sign. It's taken liquidity, which means more likely to want to go up. It doesn't need to come back. This one hasn't taken liquidity. Okay, so between the two of them, the Euro's the better setup. Now the trade is fantastic. Either one you took, the trade is good. So just point out, look, we got the same, we got the what do you call it, RSI divergence here, equal lows, and 8:35, yeah. So this is actually, I mean, it is a good trade, but you're already a bit late for this one. You could actually take this as an Asian range break on the M5. So this is the thing, once you've got the signal on the, you've got the green light on to short the dollar, it's up to you what specific setup you want to choose. So on the Euro, we still had a nice fair value gap and a discount with a session liquidity take behind us. On the pound, we didn't have that. Okay, that's that, what do you call it, SM, smart money divergence or whatever. So you could have taken this trade as just a standard Asian range break, and it would have been perfectly good.